Your company life insurance can still leave your family broke. That policy HR called free, in most cases it pays out only once or twice your salary. If you earn 70 grand, your loved ones get maybe $70 to $140,000. The median American home costs over $400,000. So your family gets a check that doesn't cover the mortgage, and the policy disappears the day you quit. You think you're protected. You're not. Let me prove it with the numbers nobody in HR mentions. LIMRA research shows 42% of American households would face immediate financial hardship if the main earner died, and nearly half own no individual life policy at all. Meanwhile, the average group life benefit from an employer is just 1 to 2 times annual salary. In 2026, with layoffs in tech and finance at record highs, and the median job tenure around 3.9 years, group coverage is more fragile than ever. This isn't a critique of your company's generosity. It's a warning that a benefit built for retention was never built to replace your income. Think of an employer life insurance policy as a vending machine tuna sandwich. It's there when you're stuck and technically edible, but you wouldn't build a family meal plan around it. A personal term life policy is the grocery list you control. You choose portion size, price, and expiration date. Your family needs 20 years of meals, not one stale sandwich that vanishes when you swipe out of the office. 1. Your workplace policy is designed to cover 1 to 2 years of your salary, not your life. On a $75,000 salary, the average group benefit gives your family $75,000 to $150,000. The median mortgage balance is around $250,000, and raising a child to 18 costs more than $230,000. That means your family has to choose, pay the house or feed themselves. No free perk should create that choice. 2. Group life insurance disappears the moment you leave the job, and that's exactly when you're hardest to insure. If you're laid off at 46 with a slightly worn health record, you lose coverage on your last day. Conversion options exist, but are usually short-term and priced like whole life. One serious diagnosis between jobs can make a private policy unaffordable or impossible. The worst time to need insurance is the exact time this policy decides to stop being yours. 3. You cannot fix group coverage to fit your debts. A generic 1x salary payout doesn't scale with your mortgage, car loans, or your kids' tuition. When you own a personal term policy, you choose $500,000 or $1 million and keep the same price for 20 or 30 years. An individual policy is built around your life. A group policy is built around your employer's headcount. 4. The price of real protection is absurdly low, so the trap is pure inertia. A healthy 35-year-old can get a $500,000 20-year level term policy for $25 to $40 per month, less than a Netflix and a pizza. Employer coverage might feel free, but free gets you a benefit that doesn't pay the bills. Spending 2 coffees a month on a personal term policy closes 95% of the gap. You don't need expensive whole life. You need a simple term policy that outlasts your job. 5. Your family's real number is 20 times your income, not 1 times your salary. If you earn $80,000 a year and want to replace that income for 2 decades, the minimum death benefit is $1.6 million. Your employer's policy pays $80,000 to $160,000, leaving a shortfall larger than the total you'll spend on housing. Calculate your own number. Debts plus 20x income minus savings. That gap is the only number that matters, and it is uncomfortably large for most viewers. 6. Here's your 10-minute override. Keep the free group coverage as a supplement, but buy your own term policy before your next birthday. Rates lock in on the year you apply, so a 36th birthday means roughly 8% higher premiums each year you wait. Go to a licensed broker or an online term life marketplace, answer the usual health questions, and choose 20-year term at 10 to 20x your income. Free workplace coverage is the appetizer. Your personal policy is the meal. Here's the only action you need. Before the end of this week, get one term life quote through a reputable broker and check the box for a 20-year level term. It costs 30 minutes and less than a dinner out. Then set a reminder to buy it before your next birthday. If you think your company benefits are protecting you, that assumption is the riskiest thing your family owns. Tap the video on the screen to see the 7 money mistakes that keep you poor. You can't afford to miss that one either.